We've already told you about a strong housing starts number in June, and now we've got even more good news for the housing market. There's a new report out that says foreign buyers have suddenly turned their scopes right onto the U.S. real estate market, snatching up residential property at a record pace. $153 billion worth of homes, which is nearly 50% higher year over year. Very nice number there, but my next guest says, okay, how do you make money off that number? He's got a way to play it. Alpine Funds portfolio manager Mark Spellman. First, how do you know that this doesn't lead down a bad road? Because we've covered the story of money laundering through real estate, and sometimes I look at the real estate prices here and see who's buying and say, real estate is the new Swiss banking account for oligarchs, and people are trying to hide their money.
Could be. Actually, that article that you were referring to mentioned a lot about Canada and people trading out of their homes in Toronto and Vancouver for $600,000 and going to Florida and buying a bigger house for $300,000. And by the way, it's only 10% of what we're talking about. I think the bigger story is the numbers this morning. The housing start numbers were terrific, and the building permit numbers terrific. And I think they have a lot of room to run. This has been a very slow, steady increase, but we're barely at halfway where we were at the peak in 2005. I think the housing market looks pretty good.
Right. So that would be the peak, I guess, was 80% higher than right before the financial crisis.
Right.
So are we? You're saying we've recovered about 40–50%.
Right. Exactly. From that peak, we're about 50–60% along the way, and we still have a great. I mean, 10-year at 2.2. Still looking pretty good as far as mortgages.
So when we look at those June housing starts,
yeah.
And by the way, for people who don't know, housing starts means a shovel goes into the ground.
Yes.
To start building. And that goes along with a subsector, which is housing permits, also
right.
Spiked. But to see that 8.3% gain, that's a good sign.
It is.
We showed home builders are up, the materials guys are up, but you have a different way of playing that.
Yeah, another way of playing it is home improvement. Also, one of the statistics was out a couple weeks ago from the Census Bureau. Home improvement expenditures are at a 17-year high. People are putting money into their homes if they're staying there, and when it comes to single-family homes, that's where you spend a lot of money. If I buy a condo, I tend to not spend as much money. But if I buy a single-family home, which is these statistics we're talking about, I buy a washer, I buy a dryer, I buy cabinets, you get a lot of spending on something like that. So the way to play that in our mind right now, we think a good way to play it is Lowe's Corp.
Lowe's is off, if my memory is correct, it's off the year-to-date
yes.
or year-over-year highs as well, right?
Absolutely.
So you're buying it at a discount, certainly to Home Depot.
For sure. That's exactly why. Home Depot has been steadily executing a little bit better than Lowe's, but when you talk about making money in the stock, I think Lowe's is where we want to be. It started off the year really well. Appliance sales doing terrific. I think some of that is the expense of companies like Sears, which aren't doing so well. They had a lackluster second quarter. I think this is a 15% earnings grower. They just raised their dividend 17% last month.
What's your price target then? It's 76, 78 right now.
We think it's a mid-90s stock. I mean, we like it in our Alpine Rising Dividend Fund. It has a really good profile where it's reasonably good, macro factors behind it, and it's raising its dividend. 25% last year, 17% a month ago.
If these numbers hold for another 45 seconds, the S&P and the NASDAQ are going to hit all-time record closes.
Yes.
Does any of that give you a little bit of indigestion,
yeah,
or do you say, let me just pile in?
No, we're in the worry business. The thing, I mean, we're in very early innings of the earnings season. I think the Yellen testimony last week was very important. 3 raises of the interest rates, and she basically said, you know, we're on hold for a little while. That really gave a backdraft, a tailwind to the stock market for the foreseeable future. We're optimistic on earnings. We think they're going pretty well. So far, they've been, you gave the statistics, 78%, I think, have beaten or matched. We're optimistic. We still think there's a green light for the market right now.
Mark, thank you for being here.